Hi everyone, welcome back to the US individual taxation classes enroll agent part 1. Yes, we are in taxation and advice. In this particular video, we'll be going to cover a lot of topic, right? The first topic we'll be covering is the self-employment tax. The second topic we are planning to cover is the excess social security withholding. The third topic we'll be covering is the tax provision for the members of 𝐂𝐻𝐿RIGH. Fourth topic we will be covering income in respect of descendant, and the fifth topic we are planning to cover is the net investment income tax, and the sixth topic is additional Medicare taxes, and the last topic we'll be covering is the able account. So there's a lot of topic, so let's dive into to understand more in detail one by one. Let's do it. Hi everyone, welcome back to the taxation classes. So we have started chapter number 4, which is taxation and advice. So far, before we went on a break, we have covered a couple of good topics, and the most important topic was alternative minimum tax, right? So for that, we understood what is the exemption limit, what is the phase out limit, what is the formula and mathematical calculation we need to do, and how we need to calculate the alternative minimum tax, and what all exemption and adjustments and tax credits we need to be take care of, right? For that, we have done certain one example as well. Then after we studied about like premature distribution of qualified retirement plan, penalty and exception to that. Then after we discuss about household employee, certain things as an household employer we need to keep in mind. So all those things we have studied. And then after we discuss about underpayment penalty, interest, and last one is the amendment return for claiming any refund if you missed earlier. So now we are jumping into the balanced topic of the taxation, which is self-employment tax, excess of social security withholding, tax provision for the member of clergy, and income in respect of descendants. And then we'll be covering healthcare individual responsibility, net investment income taxes, then after additional Medicare taxes, uncollected social security, and other taxes. And last we'll be having able account, which is in like new, you can say the tax law has been bring these points. And then after advising the individual taxpayer, we'll be covering in the next class. So these 3 pages we'll be finishing now. So let's start with the self-employment tax. What is self-employment tax? So if you remember in chapter 1, 2, and 3, we have studied like sole proprietor. They need to pay the self-employment tax. Partnership firm, in that partners need to pay self-employment tax. S corporation, where the owner of the S corporation choose S corporation as a pass-through entity. In that case of scenario, those respective owners need to pay self-employment tax. So self-employment tax is you are employing yourself either as a sole proprietor or as a partner or as an S corporation for the business purposes. So same way how you generally deduct the social security and Medicare taxes for the other employee, same way as an employer you need to deduct and deposit certain amount which is required for the social security and your healthcare benefits. That is called self-employment tax, right? What is self-employment tax? What is self-employment tax?
It's for small businesses, people who are self-employed, they need to pay the taxes, including the Social Security and the Medicare.
Right, Sachin, Mayank, Garima?
Yes.
Right, clear what is self-employment tax? Who need to pay self-employment tax?
So basically, who wants self-employment without being associated with any organization, sole proprietor basically, or someone independent.
Yeah, sole proprietors, partners, or the owner of S corporation, right? When they need to pay, when their self-employment earning is more than $400, right? When they need to pay, when their earning from self-employment is more than
$400.
$400.
Yearly count of
Yes, yearly, absolutely true. Very right. Right? And how much they need to pay? 15.3%. How much they need to pay? 15.3%,
3%.
right? How this 15.3% is being calculated? 12.4% for the old age severe disability insurance and 2.9% for the hospital insurance plan, right? Same way for the employee, they pay Social Security and Medicare, but for themselves, they need to pay 12.4% to the old age survivor and disability insurance, which is called OASDI scheme, and 2.9% of the hospital insurance plans. If you club together 12.4 plus 2.9, how much does it come?
15.3.
15.3. So the total amount payable is 15.3. The breakup of 15.3 is 12.4 for the old age survivor and disability insurance and 2.9% for the hospital insurance plan. Right? So 3 questions may expect in this part. Who needs to pay self-employment tax?
So who earnings are more than $400.
From
from self-employment,
Sole proprietor.
self-employment,
private
partnership,
Partners from S
S
corporation.
corporation.
right? And how much is the total amount they need to pay? 15.3%.
15.3%.
What is the breakup of 15.3%?
12.5% of old age surveyor and disability.
Disability insurance.
And 2.9% for,
Hospital insurance.
right? This is important. Like you'll be seeing self-employment tax in chapter 1, 2, and 3. So now finally we reach to the numbers where the percentage is being defined, right? So second point is excess Social Security withholding. For example, like in US, it is very much common that people do multiple jobs, right? Same way how in India we do like freelancing. So freelancing people also do multiple tasks for the multiple employer, or you can say multiple companies. Same way in US, it is very much common that people do work with the multiple employers. So when you do the work with the multiple employer, there might be a possibility that employer, being a conservative from the tax compliance, they deduct and deposit more Social Securities, right? For example, let's say Kamal is working with Vivek and company, Mayank and company, and let's say Shubham and company, right? I work 2 days with Shubham and company, 2 days with Vivek and company, and 2 days with Mayank and company, right? And they all have deducted, let's say, $200 each per month for my Social Security. Whereas if I club together all the incomes, my ideal deduction should be $100, $500, total $500. So they have deducted $600 and deposited $600 in my Social Security. So that means in a year, they have deposited $1,200 extra, right? Then the required. So I can claim that excess deposit as a refund. So I can claim the excess Social Security deposit as a refund. Make sense?
Yes.
Yeah, at the end of year ka check
Yeah,
karega.
when you are filing your income tax return, at the time of filing of income tax return, right? Make sense? Sachin, Vivek?
Yes, sir.
Yes, sir.
There is a possibility that employee work for 2 or more employer and the combination of those wages exceed the total Social Security maximum to be withheld. So employees entitled to credit to their personal return. Make sense? Second, next one is tax provision for member of clergy. So member of clergy, like the member of parliament or the ministries or the people who work in the government machineries, right? So if you see in India, to all the people who work in the, at the ministerial level or maybe like at the senior level in the government, they will get house allowance or they will also get sometime government houses to live. Yes or no?
Yes.
Yes, sir.
They get government house or they get house rent allowance, right? So it is being considered that they are living in the house for the work purpose. Hence, that should not be considered as taxable income. So what does it mean? Tax provision for the member of clergy: a licensed, commissioned, or obtained minister who perform ministerial services. Person who perform ministerial services as employee may be able to exclude from the gross income of the fair rental value. So the fair rental value of the home that is provided as a part of compensation, or the housing allowance provided as compensation if it is used to rent or otherwise provide a home, right? A minister who is furnished a personage may exclude from the gross income the fair rental income of the personage, including utility. However, the amount excluded cannot be more than the reasonable compensation of the ministerial service. Very simple. So this is like hardly tested. I have not seen any question on this. We all know the ministers, they do not pay taxes. Right? So income in respect of descendant. So who is called descendant? Who is called descendant?
Like
Person expired.
the person who has died and might have a son, so the son will be the descendant of the father.
Yeah, so legal heirs, or you can say the nominee is generally called descendant for the died person, right?
Yes.
So in case of death, there are two things. For example, Mr. X. Mr. X died on 30th September 2022. And now for the financial year 2022, who will file his return? And how his returns to be filed? So let's assume Mr. X is died on 30th September 2022 and Mr. Y is the legal descendant. Mr. Y is, or let's assume Miss X is the legal descendant. So in that case of scenario, there is two possibilities. One is if in the earlier year they were married filing jointly, then in current year also they can claim married filing jointly for the entire year, right? If they were not filing jointly, then they need to file two tax returns. One is the final tax return of the person who has died, and the second is the descendant tax return. Make sense? Any doubts so far? If Mr. X and Mrs. X, they were filing a joint return, then how many tax return they need to file?
Two.
No.
One.
Right? If they are filing joint return, then they can file the joint return in current year also. Right? If the married filing couple are filing separately return, then how many returns will go? Two. What are those two returns? One is the final return of the person who died, and one is the return of the legal heir or descendant. Make sense?
Yes.
Yes.
Right? So now just keep in mind these two scenarios. One, when husband and wife, they file together, are filing the joint return. The other, when husband and wife, they are not filing together, they are filing separately. So when they are filing together, it's very simple. They need to file joint return at the year end for the next this financial year. But when they are filing separately, then what they need to do, let's understand one by one. For the year of taxpayer death, you generally should file the final tax return. What is called final tax return? Why it is called final tax return?
Because after this, there is no need to file a return.
Yeah, the person in not there, then who will file the return, right? So it's a final tax return. It is called final tax return. So determine the income you should include. So here we need to determine what income need to be included in the final tax return. Generally as on the date of death, and file a short tax year return. Why you need to file a short tax year return? Because the person was not alive, right? So the person who has died, in his or her final tax return will come all the incomes which is relating to before the death, at the time of death or before the death. After the death, all income will go to the descendant tax return, right? So there are two pieces to it. For example, Mr. X died on 30th September 2022. So from 1st January till 30th September 2022, all the incomes which are being taxable income will go into the final tax return of Mr. X, right? And all the income which is generated from the assets of Mr. X after his death will go into the income of descendant. So let's assume Miss X is the descendant. So 1st October to 31st December, all the income will go to the Miss X tax return. Make sense? Make sense?
Yes, sir.
Right?
Yes, sir, I have one question. Like अगर जो
Yes.
जैसे वो marriage filing separately है और जो person expire हो गया during the year और उसने executor appoint करा हुआ है तो सर like executor appoint करा हुआ है तो सर extension claim कर सकते हैं?
Yes,
6
yes.
months.
Yeah, 6-month exemption clause is always there. Yes. That we have already studied in chapter 1. So those standard clause will continue
Okay.
as it is. So income after the death should be included on the state of beneficiary tax return, right? So here the point number A to F, let's understand one by one. So if the deceased taxpayer was married and the surviving spouse qualify for the joint return, then include the income of the deceased up to the date of death and include the income of the survivor's spouse for the entire year. A short tax return is not required because now you are filing a consolidated tax return. Make sense? When you are qualified to file a joint return, then at that point of time, there is no separate return required or no short return required. Any doubt on point number A? Yes, no?
Clear, sir, clear.
Yes,
Okay, so once again, point number B, it says if deceased taxpayer use cash method. What is cash method?
The cash basis of accounting.
Cash basis of accounting. That means when you receive the money, you book the income. When you spend the money, you book the expense, right? So then include only the income item that were actually or constructively received up to the date of death. So include only income item that were actually received or constructively received up to the date of death into his income tax return, right? For example, Mr. X has given us services to, let's assume, ABC Limited for the month of September, but Mr. X has not received the collection till his death. then that will not consider into the income of Mr. X, rather than if the amount, let's say, collected in the month of December, then that will go into the income of descendant. Make sense?
Yes.
ये surviving spouse की income में नहीं होगा include?
Yes, yes. Surviving spouse or descendant, whatever you.
Okay.
It's one of the same thing. Right? C point. When the issuer of certain forms, form 1099 interest or 1099 dividend, should issue separate form for the interest part of the descendant. Issue separate form from the interest paid up to the descendant and interest paid to the estate or other recipient. So, for example, the person who has died, let's assume he has certain fixed deposit or certain mutual funds, right, sitting in his bank, right? So in that case of scenario, the bank will be issuing form 1099 INT for interest and 1099 DIV dividend for the period of 1st January till 30th September in the name of the person Mr. X who died, right? And the interest and dividend which is generated for the period of 1st October to 31st of December 2022 will go in the name of Miss X. Make sense? Any doubt here?
No, sir, no.
Clear, sir, clear.
Okay, and that is called nominee distribution. For D point. D point say for most deduction include itemized deduction, including itemized deduction, include only those paid on or before the date of death. So when you are filing the tax return, final tax return of the person who has died, right? The only actual expenditure that person has made in cash or maybe through the bank account, that amount only you will consider for the itemized deduction in the final tax return. For example, let's assume you have Mr. X has contributed to the Roth IRA of, let's assume, $1,000 every month. So $9,000 which he has contributed from January to September will only be considered for the itemized deduction. But if the EMI is already there and the deduction is going on for October, November, and December, so that amount cannot be claimed as itemized deduction, right? Same way for the charitable contribution. If Mr. X has done, let's say $500 every month, he is doing a charitable contribution, and he has committed to contribute for the entire year. But for the 9 months, he has contributed $4,500. So $4,500 can be considered for the itemized deduction, but the rest of the $1,500 for October, November, December will not be considered into the itemized deduction. Make sense?
Yes, sir.
Garima, Rajat, Mayank.
Yes, sir.
Right. Next one is the full amount of the sum deduction and credit, such as standard deduction, earned income credit, child care credit, credit of elderly disabled, can be taken in the final tax return. So those tax credit can be claimed full, but the deduction would be for the period the person was alive, right? And IRS publication 559, survivor, executor, and administrator for additional information. Yeah, that's extra information, right? For deduction credit that you can claim full, right? Any doubt on A to E point?
Sir. So like in A point, if there is a deduction, it's basically like deduction for the whole month. We can say not.
No, the amount he has paid, not for the whole month.
Okay. Oh, like the amount he has paid. Like the amount is fixed for a period. So and he ties in between the
Amount
time periods.
actually paid either in cash or through bank,
Okay.
right? Yeah, Vivek, Sachin, Shubham, Garima,
Yes, yes, sir.
clear? So point number A was the joint return benefit. Point number B was cash method of accounting, how we need to deal. Point C was for interest or dividend nomination, right? And then point D was for itemized deduction, and F was for standard deduction or tax credit. E was for standard deduction and tax credit, right? So next point is healthcare individual responsibility, payment and exception. I think this is no longer applicable, so you can ignore this. It's not important. Next one is net investment income tax. So net investment income tax is 3.8% surtax. So you need to pay additional 3.8% surtax on the portion of taxpayer modified adjusted gross income over certain threshold. The net investment income threshold for 2021 is 200,000 for single or head of the household, 250,000, and for married filing jointly 250,000 and married filing separately 150,000. Right? If your income from the investment, what is income from investment? What is investments? What is investment?
So like we buy mutual funds, so like
Mutual fund or real estate property or stocks, right? Fixed deposits, right? Cryptocurrency,
Like
NFTs. With any such currency or any such property in which you have made an investment to earn the passive income, which will be interest or dividend mainly, right? If your interest or dividend income is more than $200,000, if you're filing as a single or head of the household, or $250,000 if you're filing jointly, or $125,000 if you're married filing separately, then you need to pay 3.8% extra tax.
like so we have a rental property or maybe we are getting royalty from some like investment. So we have to pay the 0.8% on the whole. Like
Yeah, 3.8% on the investment income.
okay.
Right, everyone? Comfortable?
सर जो हमारा रेगुलर टैक्स रेट होगा, जैसे मान के चलो हमारी इनकम ये 130,000 है और हम MFJ फाइल कर रहे हैं, तो उसके ऊपर भी जैसे ये MFS फाइल कर रहे हैं तो उसके ऊपर
MFS is married filing jointly, separately.
या जो 130,000 है, तो सर उसके ऊपर जो हमारा टैक्स आता है, जो केवल इनकम आएगी उसके ऊपर दोबारा हम 3.8% लगाएं.
No, if your income from investment is more than this.
हाँ सर, इन्वेस्टमेंट थी ना, इन्वेस्टमेंट इनकम हमारी 130,000 है.
Yeah, then yes. Then you come in this bracket 125, married filing separately. Yes, then you need to pay 3.8% extra surtax.
Okay.
Additional Medicare taxes. Additional Medicare taxes, normally every employee generally deposit Medicare taxes and employer also contributed that, right? But if your income is less than $200,000, then you need to deposit 1.45% of the Medicare tax. But if your income is more than, if your wages is more than $200,000, then you need to pay additional 0.09%. So your total will be 9 plus 1.45, 2.35% if your income is more than $200,000. right? Any doubt here? So far so good.
सर ये इसका मीनिंग क्या है सर? ये employers are required to withhold additional Medicare taxes above the 1.45% Medicare tax rate.
That is what in simple language I'm saying. If your income is less than $200,000, if your wages are less than $200,000, then you need to pay 1.45% as a Medicare tax. If your wages are more than $200,000, then you need to pay additional 0.09%. That is 2.35%.
ये तो जो मेडिकेयर टैक्स है इसका बेनिफिट गवर्नमेंट देती है, फ्री करती है मेडिकल।
Yes. So after your retirement, you get all the medical benefits free.
अच्छा, जैसे रिटायरमेंट से पहले भी?
No, this comes under retirement benefit plan. Social Security and Medicare, they all are retirement benefits.
इससे पहले पे करना पड़ता है?
Yes, every month you need to pay. Yes. So in US, normally 1/3 of your salary go into the withholding tax, Medicare, Social Security. Right, Shubham? Yeah. So if you are earning $10,000 a month, so on an average, $3,300 will go into withholding tax, Medicare tax, or your state tax, your city tax, and the Social Security deduction. And it has hit us as a non-resident of United States of America more because we never get any benefit of Medicare or Social Security, which is being deducted from our salary. Right, Shubham?
Yes, sir.
Right, it's a permanent loss for us. I know you are a citizen, you can avail those benefits, but for me it was a permanent loss.
नॉन सिटीजन्स के लिए सर ये तो है कि वो टैक्स भी पूरा भरते हैं फिर भी स्टिल दे हैव
yeah, they pay Medicare, they pay Social Security, but they will not get any benefit.
तो उनको इंडिया में मिलना चाहिए उसका बेनिफिट।
Yeah, unfortunately, India mein there's no Social Security or Medicare. So it was a like kind of permanent loss. We are paying to the US government for staying over there. Okay, so next one is uncollected Social Security and Medicare taxes. If the employee was treated as an independent contractor and Social Security and Medicare were not collected to their wages, then Form 8919 should be filed. So for example, if you have hired someone on a contractual basis and you are not deducting and depositing Social Security or Medicare, then you need to file Form 8919 in which you will be submitting the detail whom all you have hired as a contractor and how much hours they have worked, how much compensation you have paid, and how they are depositing their own Social Security and Medicare. So those declaration will go. Right? Next one is other taxes, which is like more prominent is first time home buyer credit. So this is also like kind of very old scheme, 2008 to 11. So not much relevant for your exam purpose, to be very honest. But like maximum it can come. I don't see like it will be much relevant for your exam. You can ignore this one.
तो ये जो इसमें फिगर लिखी हुई है $7,500, ये सर 10,000?
No, that's a first-time home buyer who has purchased the home in the year 2008 to 11. So any interest, yeah, so that's completely out of your exam. So it's not relevant for your exam. So you can ignore this one. Next one is able account. Able account. What is able account? Is achieving a better life experience. Able mean A for achieving, B for better, L for life, and E for experience. Achieving a better life experience. So maximum contribution which an individual can make is 12,800 into the able account. Similar to like in first chapter we all have studied health insurance plan or healthcare plans, right? In that also healthcare account or health plan accounts, in that also you can deposit up to $7,000 in a year, but that amount you can use only for the medical expenses. right? Here you can deposit up to $12,800 a year, and this money you can use for achieving the better life experiences. So we'll be sharing what all those comes in it, and those expenses are being considered as an allowed expenses. So for that you will get certain tax benefits. So here, if you see in journal, person can take a distribution from their able account to pay for any qualified disability expense, where you can use this money for a qualified disabled expense, such as expense for maintaining and improving their health, independence, quality of life, right? Qualified disability expense include education, housing, transportation, employment, training, support, assistive technology, personal support services, health prevention, wellness, financial management, administrative service, legal fees, expenses or oversight of or monitoring, and the funeral and funeral expenses, right? Like in US, you generally you will get this benefit, and people do avail it for the gymming expenses, and they get certain benefit to purchase healthcare equipment, or you can say gym equipment. And even though you can purchase like this fast track watch, or you can say the watch who track like BP, sugar, and all those things, so those are expenditure you can use. And on those income which you are contributing to the able, to the extent you are using that money for this qualified disabled expense, is being exempt, right? Any doubt here? Are you guys with me or left?
कुछ minimum amount भी है जो withdraw कर सकते हैं monthly.
Yeah. So you can contribute up to 12,800, and you can withdraw any amount out of those 12,800. That's based on your requirement. So how do you calculate that? Qualified portion of the distribution divided by total distribution multiplied by earning portion of distribution. That means, for example, if you have spent $10,000, out of which $3,000 is relevant. So 3,000 divided by 10,000 multiplied by the earning portion of the distribution. So to that 12,800, to that extent you can claim. Right. So this is all for the taxation side. So shall we do few questions?
Yes, sir.
Let's do few question on it. So in this taxation, you have taxation or advising. So we have done with the taxation part. Okay, what action should taxpayer take regarding the repayment of Social Security benefit received in prior year if the total figure shown in box 5 for all the taxpayer current year from Social Security 1099, RRB 1099 is a negative amount, and the portion of negative amount that represent benefit of taxpayer include the gross income in prior year 3,000 or less. So call of the question is, what action should a taxpayer take regarding the repayment of Social Security benefit received in prior year? So first option is taxpayer must amend the prior year return to claim the deduction on Schedule A, and it is not subject to 2% of AGI limit that apply to certain miscellaneous itemized deduction. So this option is obsolete. Second is the taxpayer can claim a deduction on Schedule A for the portion of negative amount that represent benefit included in the gross income in prior year and it is subject to 2% AGI limit that apply to certain miscellaneous itemized deduction. Third is the taxpayer must amend the prior year tax return to claim a deduction on Schedule A, and it is subject to 2% of the AGI limit that apply to certain miscellaneous. And last one, taxpayer cannot claim the deduction because it is miscellaneous itemized deduction and can no longer be deducted. So what a taxpayer should do here? Question is, what action should a taxpayer take regarding the repayment of Social Security benefit received in prior year if total figure shown in box 5 for all of the taxpayer current year is a negative amount, and the portion of negative amount that represent the benefit the taxpayer include in the gross income in prior year is 3,000 or less. Yeah, take a best guess.
गैस ही करना पड़ेगा सबका लॉजिक.
Just give a best guess.
Fourth.
Fourth, the taxpayer cannot claim the deduction because it's a miscellaneous itemized deduction and can no longer be deducted. Okay, how about others? Shubham, Garima, Mayank.
Thinking, sir.
Give a best guess. It's not necessary to be 100% right.
Option third.
Option third, the taxpayer must amend the prior return to claim the deduction, and it is subject to 2% AGI limit. Okay, how about others? Shubham, Garima.
Sir, option third.
Option third. Why? Why option third, Garima?
So just confused between option third and fourth. So
So just a guess.
yes, sir.
Okay, Divya. Shubham.
और ऑप्शन फर्स्ट क्योंकि 2% AGI लिमिट 2% AGI लिमिट उसमें कुछ लगते हैं एक्सेप्शंस के अंदर.
No, option first it's saying it is not subject to 2%. So is it subject to AGI limit or not? Is it subject to AGI limit or not, this question? If not, then I think fourth option is good. If yes, then first and fourth is not correct. Will we hit submit? Let's see what it is. Yep, that's a correct. Present to publication 17, there are some situation where a taxpayer form SSA 1099 and 1099 RRB 1099 will show that total benefit repaid are more than the gross benefit received. If this occurred, the taxpayer net benefit in box 5 will be negative figure, right? And none of their benefit will be taxable. If total amount shown in box 5 of all the taxpayer form is negative figure, a taxpayer may be able to deduct the part of this negative figure that represent benefit included in the gross income in an earlier year if the figure is more than $3,000. If it is less than $3,000, it is a miscellaneous itemized deduction and can no longer be deducted because 2% provision has gone out in 2020 itself. So from last 2 years, this provision is no more. Right? Make sense, everyone? Shubham, Vivek,
Yes, sir.
Mayank.
Yes, sir.
So 2% miscellaneous deduction clause has already been removed 2 years ago. Next is Donna has 145,000 in self-employment income and 140,000 in wages. Her employer does not withhold additional Medicare taxes. Which of the following statement is correct for Donna 2021 tax return? She is required to pay additional Medicare tax because her total Medicare wages are greater than $200,000. She is not required to pay additional taxes because her employer filed to withhold the tax on her behalf. She is not required to pay additional Medicare taxes because neither income amount exceeds the threshold 200. None of the responses are correct. What is the correct option? So whether she is required to pay additional Medicare tax or not?
Yes, sir. क्योंकि amount ज़्यादा है उसकी
The
wages.
amount is more than $200,000. Which option should be right?
First.
Everyone? Mayank, Divya,
Yes, sir.
Garima, right? So her income is more than $200,000. So she has to pay additional Medicare taxes. How much was the additional Medicare taxes? 0.09%, right?
Yes, sir.
So the tax law give special treatment to certain type of income and allow special deduction and credit for certain type of expenses. Taxpayer who benefit from the law in these way may have to calculate the alternative minimum tax. A review of Jamie past 5-year tax return show he paid AMT for 2020 and had a minimum tax credit carry forward to 2021. Which of the following statement is applicable for Jamie for 2021 tax return? So very simple. In 2020, Jamie has paid AMT, right? And certain AMT is being credited for 2021 to set off. So which statement is correct? First, he is not eligible to take the credit for prior period minimum tax. He may be eligible to take credit for the prior year minimum tax. He may be eligible to take a refund credit for the prior year minimum tax. He may be eligible to take both refund or non-refundable. So whether the tax credit, minimum alternative tax credit or alternative minimum tax credit is a refundable or non-refundable?
Non-refundable.
So which option is right?
Second one.
Huh?
Second.
Yeah. Garima, Divya, Mayank.
Yes, sir.
Which one?
The second, sir.
Okay. Very good. A taxpayer has total tax in previous year of $21,000. In this year, the taxpayer received a bonus and his tax increased to $4,500. The taxpayer has long-term capital gain of $4,000 with the tax of $600. The taxpayer withholding was increased to $23,700. To avoid penalty for underpayment of estimated tax, the taxpayer must do what? Do nothing since the withholding exceed 90% of the tax due. Do nothing since the withholding exceed 100% of the last year tax or exceed 90% of the tax due in this year. Nothing since withholding tax exceed 100% of the last year and pay additional. What should he do? So the call of the question is, first let's understand the question. A taxpayer has a total tax in previous year, 21,000, right? In this year, the taxpayer has received bonus and his tax has increased to 4,500. That means, what is the total tax liability? 21,000 plus 4,150. How much is it?
25,500.
25,500. So taxpayer has long-term capital gain of 4,000 with the tax of 600. So that is irrelevant information. The taxpayer withholding increase to 23,700. 23,700 is how much percentage of 25,500? What is the total tax amount? 21,000 plus 4,500, 25,500 into 90% is 22,950, and he has paid 23,700, which is more than the previous year actual tax, right? So he has to do nothing since the withholding tax exceed 100% of the last year or exceed 90% of the tax due. Make sense?
Yes, sir.
Last question of the day. In which situation would Janice not be required to file Schedule H, household employment taxes for year 2022? Paid household help other than her mother, 2,300 for a period of July, August, September. If you are paying more than 2,300 in cash, then you need to file, right? Second is withheld $100 federal income tax from the payment to her yard worker. Paid 2,300 wages to Christina for babysitting in Genesia home. Paid 2,300 to her mother for housekeeping. In which situation she is not required to file Schedule H?
Option 4.
Option 4.
Why?
वो relative को pay कर रहे हैं ना अपने.
Relative.
That's absolutely right. So you guys are doing awesome. See, we got 100%, and yeah, just on a time we need to slightly work on, right? So I think you got the concept for today's class. So I'm very happy we got like 100% result. So keep doing practice, and in next class we'll be finishing this chapter with the tax advices, right?